Good. So good morning, everyone, and welcome to today's meeting of the Board of Revenue Estimates, made up of the Budget Secretary, Mr. Brinkley, and the Treasurer, Nancy Kopp, and myself, the Comptroller of the State of Maryland. I'd like to recognize at this point the Board's Executive Secretary and Director of the Bureau of Revenue Estimates, Mr. Andy Schaufele, for his report to us. Mr. Schaufele.
Thank you, Mr. Comptroller. Good morning. Good morning, Secretary Brinkley. Good morning, Treasurer. I'd like to start by thanking the board members and the RMC for all of the hard work and especially your support. We could not do this without the support, especially of these three board members, and we're very appreciative of that. Before jumping into the figures, I'd like to just spend a little time defining our goal and our approach to really kind of bookend what these numbers are. We are here to discuss revenue scenarios for the general fund based on possible economic scenarios playing out as a result of COVID. First, we're looking at these estimates as guidance. This is not a regular meeting of the Board of Revenue Estimates. There will be no vote. Other estimates will be necessary in the future for other funds, such as the Education Trust Fund or the TTF. This is an attempt to provide revenue guidance so that policymakers and budgeters can respond to the fiscal side of the crisis with intelligence and foresight. But in providing this guidance, we must first draw attention to the incredible amount of uncertainty that exists in this environment. Obviously, all forecasts are speculation, but never in my career have the differences in possible scenarios been so broad. It would be completely inaccurate for any of us to profess with a level of certainty that these figures and scenarios will not be revised, perhaps significantly at a later date. I suspect the BRE might revisit these figures a couple of times prior to the official September estimates. That said, what we will present provides a very realistic band of outcomes based on what we know now. With regard to the economic approach, we are using economic scenarios from Moody's Analytics. Moody's is led by Chief Economist Mark Zandi, an economist that we all hold in great respect. Further, Moody's moved aggressively early to develop economic scenarios, include not just economic data, but virus data. They've employed epidemiologists and amended their models to account for assumptions from virus experts, and we deem that very, very important in this endeavor. Moody's put together several scenarios back in April. We are using what are called their S2 and S4 scenarios. This is important because we want to be transparent that we opted not to use their baseline scenario. The S2 and S4 scenarios, you're going to see those words as I go through my presentation. They're less optimistic than Moody's baseline in April. This was because we felt that the modeling had not yet caught up with the virus in the baseline around the time of middle of April. We have learned to identify opportunities where the models are not keeping up with real-time events. We believe this is such an occasion. And it's also important to note that we're treating the stay-at-home order slightly differently. No models can predict the economic impact of the stay-at-home orders, so we are using real-time data to work through those orders and adjust revenues appropriately. So I'm going to go and share my screen now. And you should see a PowerPoint. I'm going to move on to the revenue guidance here. And what you see here is a range between the orange and blue lines as the likely impacts by fiscal year. The blue line is derived from economic variables from Moody's S2 scenario, and the orange line is from the S4 scenario. As you can see, the impact is huge, ranging from between $925 million and $1.1 billion in fiscal year 2020 to between $2.6 billion and $4 billion in fiscal year 2022. The figures get larger as the years go on because the impact compounds, but also because the scenarios have different assumptions. S2 is more of a U-shaped cycle, while S4 is more of a swoosh style cycle. Other than a near-term rebound for the lifting of stay-at-home orders, both scenarios have job losses through the middle of 2021. This is important. Obviously, employment is the most important variable directly in our forecast. The depths of job losses differ, as does the pace of recovery, and we'll see some of those details soon. Now, before running through the assumptions and the scenarios and key impacts, I'd like to discuss the difference between the worst case scenario that we discussed about a month ago and these figures. I scored the worst case for fiscal year 20 at 2.8 billion. Now we are showing a likely range of between 900 million and 1.1 billion. First, obviously the worst case scenario was just that, whereas these are likely scenarios. But most importantly, we now have data that shows our income tax withholding has been far more resilient than I had expected. We actually had growth in withholding in April. This defies every bit of logic, and we've spent considerable time trying to understand why. Here are unemployment insurance claims. These are prior to today's releases, but used to illustrate how rapidly the job downturn has occurred. These are new claims, not necessarily continuing claims, but they do represent the havoc in the job market, where we've seen almost 500,000 individuals in the state of Maryland claim unemployment insurance. How could that happen and we still have wage growth? The worst case scenario had assumed that withholding could fall up to 22%, and it had that drop occurring almost immediately. That has not been the case. We cannot be certain as to why withholding is held up, but here are speculated causes. First, we are buffeted by our strong government presence, but that was accounted for in the 2.8 billion figure. So that is a factor in withholding's resilience, but does not explain the difference in expectations. Second, employers did learn a lot during the recession. Cash balances have been high throughout the expansion, and borrowing was relatively cheap for those with good credit. In other words, balance sheets were strong coming into this. Third, and related to number two, big organizations do play a large role in our payroll economy. About 4.5% of our entities, including government, account for about 80% of our withholding. Fourth, employers tend to care for their employees. It is not just X's and O's. Most employers regard their relationship with their employees as a fiduciary arrangement. Employers are likely to engage other cost-cutting measures before examining payroll. Fifth, the ongoing story throughout the prior expansion was the lack of skilled workers. Investments made to date in training may make employees less disposable than in prior recessions. And lastly, and dare I say it, perhaps the government programs have helped. The PPP program, as well as state and local programs ranging from forbearance to grants. The chart I'm showing you here is a bit noisy. It's year-to-date withholding, and you can see how volatile this is. Even this is an attempt to really smooth out some of the volatility. But you can see that withholding is held up in a growth position even after the stay-at-home order was activated. Now the trend is negative; it's trending down, and we do expect that withholding will turn negative for the rest of the fiscal year. But the resilience here is nonetheless a very positive surprise. Now, to navigate onto some of the economic factors, this slide here is the year-over-year change in GDP for the national level. You can see the contraction for the Great Recession over on the left side. The contractions that are forecast for the COVID recession are 2 to 3 times larger than the Great Recession. I'm repeatedly shocked at the potential depth of this downturn. The Great Recession is capitalized. It was supposed to be a once-in-a-lifetime occurrence, like the Great Depression. But this is not a regular business cycle recession. This is not a recession caused by the financial markets. This is an exogenous occurrence that is going to wreak havoc in the real economy as well as the financial economy. There are many key assumptions in each of the scenarios, but I'll mention a few here. They both assume that a vaccine is widely dispersed in the United States by the fall of 2021. They both assume another spike in cases as states open, but it's worth noting that neither assumes that states place additional stay-at-home orders. S2 assumes that the federal government provides additional stimulus, while S4 assumes that politics gets in the way of meaningful stimulus. Then they have varying rates of job and economic losses and very different terms of length through which the economy and jobs begin to expand. That will be evident on subsequent slides, but based on what I've just said, you can sense that even as bad as these figures are, there is potentially downside risk. The next two slides compare the scenarios for Maryland GDP to the national impacts. As you'd expect, we don't fall as far and therefore don't see as strong as a recovery growth rate either. This is consistent with Maryland's history and our industrial composition. Again, government and education serve to minimize downside risks in a recession, just as they limit upside in expansions. I personally prefer our lower level of general economic volatility. This slide here is the S2 scenario. The hashed line is US GDP. The blue is Maryland. So again, we don't fall as far. US falls about 3 percentage points further. And a similar proposition in S4, where we fall just under 10%, while the nation falls about 13%. So again, the scenarios are consistent with Maryland's economic bones. Moving on to the next slide, this is each of the scenarios indexed to what will be their prior peak, 2019 Q4. This slide helps to compare the scenarios that we're using and helps to communicate the shapes of the downturn and the recovery. S2 shows a peak to trough decline of 8%, while S4 shows almost 12%. They both have the sharp downturn in this quarter, 2020 Q2, as the majority of the economy is shut down for the stay-at-home order. They both have a slight bounce back in Q3 as we reopen the economy. Then S2 has one more quarter of contraction before entering recovery, albeit a slow recovery. S4 has a protracted downturn after the Q3 bounce back and then begins a slow-paced recovery in 2021 Q3. If I had to assign shapes have become a popular nomenclature during this period. S2 is similar to a U. You could argue it's a W since there's that slight pickup there in the third quarter before turning down, but U or W would be sufficient. S4 is the Nike swoosh. You'll notice that we do not see a V-shaped recovery scenario. We have not bought into that theory. It seems that this economic calamity is going to continue into the future. And it's not hard to see why. In the first order of impacts are customer service-based industries, for example, food service, retail, perhaps even education. Many businesses will not be able to weather the stay-at-home order and then reduce demand either because of policies requiring limited capacity or simply because consumers are reticent to return to normal. Then banks and commercial real estate feel the pain as businesses fail and new businesses are not formed. Commercial real estate might be especially impacted. The workplace for the knowledge economy may never look the same again. One of our strengths is our reliance on the knowledge economy. I won't pretend to know exactly how this will play out or how many degrees of separation will occur between events, but customer service and real estate sure seem to be facing down generational restructurings. I would argue that those were already underway, but this will amplify and expedite those changes. Again, another layer of uncertainty as how this expansion or the eventual expansion will proceed. The last slide I'll show regarding to the economics is a look at the payroll jobs in the state of Maryland. Again, we have a comparison to the Great Recession on the left of the graph. You can see that during the Great Recession, we lost 123,000 jobs over the course of 2 years. S2 has us doubling that figure in 1 quarter, and S4 has us almost tripling it. The magnitude of these figures is staggering. Up to 343,000 job losses in this current quarter. And then you can see the prolonged impacts. S2 has employment levels almost back to prior peak at the end of 2024, but well below where trend was headed, while S4 is still more than 100,000 jobs short at the end of 2023. Coming back to the revenue impacts from these, frankly, harsh economic numbers. Not surprisingly, the income tax is the largest hit. It represents 50% of all general funds. Also unsurprisingly, sales tax is directly impacted as it represents 25% of all general funds and is seeing declines of between 30 to 60% per month is expected through the end of this fiscal year. And then all of our other sources sum to the balance. That's the S2 scenario. The S4 scenario looks similar by component. The numbers are just much larger. And then one more slide just to put these numbers in perspective. And instead of just talking about the losses to the general fund, but to look at how the general fund dollars would compare to prior trend and history. Here is a chart that shows the level of general funds in terms of dollars. The hash line is the prior March estimate. We haven't been able to fully account for the outcomes of session just yet, but on the revenue side, it's not significant relative to what we're showing here. But then you can see the blue line for S2 and the yellow for S4. These are extraordinary impacts. The outlook is dramatic and depressing at times, as I'm sure you're feeling listening to my presentation. But it is the reality of the situation that we face. And I'm confident that we can overcome. Our state and country will rise to the challenge. We always do. And with that, I'll turn it back over to the comptroller and the board members. Thank you.
Thank you very much, Mr. Schaufele. Excellent report. I want to note, like you did at the outset, that these projections that we're presenting today will serve as fiscal guidance to the governor and the General Assembly, but they are not subject to a vote by this board. Coming down in the car from Tacoma Park today, I heard on the radio that the national unemployment first-time filings are 36.5 million Americans. Actually, it's probably higher than that because a lot of Americans are not working but not eligible to file for unemployment, and that 40% of those unemployment job losses are not expected to return to the economy. So it just indicates the fluid and rapidly evolving nature of this pandemic and its effect on the economy. I do want to just, in addition to indicating to the people of the state of Maryland that we're not alone in this. Obviously, every state in the country is going through the kinds of analyses that we are, not just on public health issues, but also on the economic consequences. And I just want to reiterate what Governor Hogan said yesterday about how great the compassion and generosity of ordinary Marylanders has been throughout this harrowing experience. And we see it all the time. And I want to associate myself with the governor when he talked about the compassion and generosity of ordinary Marylanders. And I think it's contributed to some of the phase 1 opening that apparently we're going to go into tomorrow. But given the fluid and rapidly evolving nature of this pandemic, its impact on the economy, we obviously are going to be reviewing these figures on a relatively frequent basis, certainly more frequently than normal. I want to thank Treasurer Kopp and Secretary Brinkley, the other members of the Board of Revenue Estimates, but also the staffs or everybody who, under Mr. Schaufele's direction and organization, have produced this exceptional report, and who all work collaboratively, the legislature, the executive branch, comptroller's office, and the treasurer's office. So that revenue monitoring committee is constantly looking at these estimates, and these are just incredibly challenging times. What we're looking at is a snapshot of what can only be described as an economic nightmare. And these revenue figures, along with the number of unemployed Marylanders and businesses on the verge of closing their doors permanently, are unprecedented in their scope and magnitude, as Mr. Schaufele's comparisons back to the Great Recession underscore. And it's just a rapidly evolving nature of this fiscal uncertainty, and it's all caused by the public health concerns about the virus that we frankly still don't completely understand. Scenario 2, as Mr. Schaufele indicated, would result in a $925 million reduction in fiscal year 2020, which means over the next 2 months by June 30th. That's a significant figure to look at in the near term. and then $2 billion in fiscal year 2021 and nearly $2.6 billion in fiscal year 2022 were on the fiscal year from July 1st to June 30th in Maryland. So scenario 4, which is the other more pessimistic alternative, would result in a $1.1 billion reduction in fiscal year 2020, $2.6 billion in fiscal year 2021, and almost $4 billion in fiscal year 2022. The two revenue projections for fiscal year 2020 that we're presenting today are significantly lower than, as Mr. Schaufele noted, the original worst case scenario projection. There are a wide range of factors that contributed to this, from employers hanging on to their employees as long as they can, to the PPP, which is the Payment Protection Plan, working as expected to preserve jobs. But what we do know is that government helping businesses, let me just emphasize this again, government helping businesses and Maryland families keep more cash in their pockets has been a major contributor to this higher than expected rate of withholding returns. That's why I'm proud that this agency extended filing and payment deadlines for individual and business taxpayers, because now is not the time for government to be reaching into people's pockets and taking their cash. They need that money. Our citizens need that cash in order to keep our friends and neighbors employed, to pay the rent, mortgages, and put food on the table. As Mr. Schaufele noted, the two scenarios assume several factors that in many cases are beyond our control. Scenario 2, for example, assumes that Congress will provide financial assistance to states and local governments, and that they're going to provide additional stimulus packages that will be approved to assist struggling American small businesses and corporations. Frankly, given today's outlook in Washington, that is a very optimistic outlook because of the deep partisan divide that has currently paralyzed Washington, and frankly is paralyzing a lot of the country, and sadly is moving into people's perspectives and comments about even whether the pandemic is a serious problem. It is a serious problem, but we could end up, unfortunately, in a worse situation, as Mr. Schaufele said, because both of these analyses assume two things: that A, we have a vaccine that actually works to protect people from being infected by the coronavirus, and that vaccine is widely distributed to the citizens of the country. And secondly, that we don't have to endure another closure of the American economy by rushing forward into premature openings. If the closures happen against our best wishes, and there's another resurgence of this virus and we have to close down, and against our most fervent wishes and expectations, we don't end up with a vaccine next year, we're in a potentially much worse situation even than we're describing right now. As comptroller, as chair of the Board of Revenue Estimates, I've consistently used this platform to warn against massive spending, urge fiscal caution, and advocate for saving as much money as possible. We're not like Washington and Maryland. We can't just borrow and accrue unsustainable deficits that we pass along to future generations. We don't have our own Maryland currency. As I've said in the past, we can't be socially responsible if we're not fiscally responsible. And as we enter this era of economic devastation, particularly in the unemployment figures, and that is just, once people look at these figures and realize that this incredible job loss and nosediving of employment may be with us for some time, they'll understand the phrase economic devastation. I can't emphasize enough, in my opinion, that now is the worst possible time under the worst possible circumstances to enter into massive new spending obligations, to take more money out of consumers' pockets, especially for the hundreds of thousands of our fellow Marylanders who are experiencing job loss, potential job loss, reduction in income. Obviously, we're going to overcome the public health crisis. The best minds in science and medicine, I am sure, will find a vaccine, but this is not a guaranteed outcome. Obviously, policymakers in Washington are going to find a way to avoid another closure of the economy while safeguarding the health and well-being of our citizens, especially the most vulnerable upon us. But we have to, at some point, begin to come together and figure out how to, what I describe as win the recovery. We have to subject every new policy initiative in Maryland to a 3-point test. Number one, will it put more money in the pockets of Marylanders, or will it take more money out of their pockets? Number two, will it put Maryland's small businesses in a better or worse position to compete, succeed, and survive? And number three, most importantly, will it make Maryland a more or less attractive state to live in, invest, and retire? Everything that we do moving forward must be viewed through these three fundamental questions. All of us are going to have to pull together: the governor, legislators, local leaders, nonprofit organizations, advocacy groups, and the business community to win the recovery. We must rise to the occasion, make the painfully difficult decisions guided by science, fact, and logic, which I believe Governor Hogan is giving us very good, compelling leadership on. But we need to do that in order to get through this period. I wonder if I could call on Secretary Brinkley to give us his perspective and comments, followed by Treasurer Cobb.
Sure. And thank you, Mr. Comptroller, for those comments. I assume my microphone's working. Andy, just nod, because I had some sound difficulties earlier. But I certainly appreciate this opportunity. And so, Mr. Comptroller, thank you. Madam Treasurer, thank you. And certainly, Andy, to you and your team. And I emphasize, I have this in the past, but it's a team effort, as you all have continually had conversations and are monitoring all the data that comes back to all this. And so, and what you're trying to do here is to quantify the impact of something nobody could have foreseen, and especially its impact on all of us. Just as these are not ordinary times, it's certainly not an ordinary meeting. And I know that back in March, I posited the possibility that we would have to sit down either in May or in June to sit down and have this conversation so that we could get our arms around not just the decisions that were made by the legislature, but what we have to do as we move forward on all of our budgeting decisions. By revising these estimates, we're certainly acknowledging that we're facing what we hope is a once-in-a-lifetime crisis, but we don't know. But the issue is there's a challenge in front of us, and I think that the public can see by this team effort, we're stepping up to do what needs to be done for everybody. These new projections could punch a 6% hole in our FY20 revenues from an impact of just around 3 months. The problem potentially worsens to more than 13% when extrapolated out to a full year in FY21, before potentially reaching historic revenue loss of upwards of 20% for FY22. And nobody has anything for 22 in front of them other than these projections as we're moving forward. So keep in mind, as the department starts making recommendations for the submission of that budget moving forward, we'll have those conversations this fall, but we have to see the impact on 20, 21 before we can even start moving forward with some of those. And Andy, I want to acknowledge your team. Either it wasn't, I guess it was included in yesterday's presentation, but I was looking at all the detail on the other graphs. I never scrolled down to this last graph, and that's exactly what I wanted to see. And I think what the legislature needs to see is the impact of both of these scenarios on our path, or our historical path of general fund revenues, and to see that if we had that worst case scenario take place, we would be back down in general fund revenues comparable to FY16. And that is just shocking to what we might all have to deal with. So with this meeting and this out of sequence action, the state is responding swiftly and decisively. And in fact, the bond rating agencies. Madam Treasurer, I know that you'll acknowledge this part. They compliment Maryland for this willingness and the ability to appropriately identify what our challenges are and then act quickly. The governor took a strong first step last week by vetoing new and increased mandates rushed to completion by the legislature. Mr. Comptroller, you addressed some of that this is not the time to really open up some of those new programs and projects until we can adequately take care of what we already have on the books. If we are to save the patient, which is our state, let me get rid of that text message that just popped up. If we are to save the patient, our state, first we have to stop the hemorrhaging, and no matter how that is characterized. What remains before us, though, as the cliche goes, is still a journey of 1,000 miles. And this certainly is one of those first steps that we have to take. We will use every tool at our disposal to provide essential government services and get our citizens and state on a glide path to recovery, including reducing spending by the Board of Public Works, tapping into the state's cash reserves, and potentially having to budget out most mandates with a BRFA in the submission of the FY22 budget. That'll come up this January. There are tough decisions to be made, but we have to do exactly what is necessary. So I've spent my entire tenure as budget secretary talking about restoring fiscal stability to Annapolis. And now I find myself in the new challenge. In fact, all of us find ourselves with a new challenge, working with our colleagues and throughout the state government to solve the short-term budget crisis precipitated by COVID-19. Everyone understands that the state's ability to weather this storm is entirely dependent on our willingness to make difficult decisions and sacrifice where we can. Remember, no one, no project, no program, no mandate, and no formula can or will be automatically exempt from these actions. So with that, Mr. Comptroller, Madam Treasurer, I appreciate the opportunity to comment, and I appreciate also our willingness to work together, and I think the public needs to see that we do maintain steady communication so that we all are aware of what's going on, and then we can make our appropriate policy decisions moving forward. So thank you.
Thank you, Mr. Secretary, and Madam Treasurer, the floor is yours.
Thank you, Comptroller. I want to add my thanks to Andy. Andy seems to be set on his decision to retire from this office in the very near future, and I'm sitting there trying to figure out how to lock those doors behind him so he can't get away. You have been a great expert for us to rely on, and you're going to be very, very sorely missed. The message I took from not from all of the political discussion, but from Andy's numbers, is that we are in an era of uncertainty. Of course, we have just been looking, as is our job, at the state revenue, general fund revenue. That's mostly the sales tax and the income tax. We don't know whether there will be federal assistance, but even if that assistance amounts to only making the funds that are already allocated more flexible for us to use to help the glide path that the Secretary talks about, that would be very helpful. I must say I'm very concerned that before we try to solve our immediate problem by cutting jobs and adding to unemployment, or by cutting necessary services to the citizens of the state of Maryland, we look at all the alternatives. And that certainly does go beyond simply the sales tax and the income tax, which no one has proposed increasing. As Andy pointed out, we have to even strengthen our job training resources, because a certain number, but we don't know what number of the people now seeking unemployment will not come back, even though the governor has begun to reopen business today at 5 o'clock, tomorrow at 5 o'clock. So we are going to have to gear up for a new era. And it's going to call for looking at all the potential sources of revenue and all the spending priorities. And I hope for all of the branches of government, the legislature and the governor, to be working together in a way that this Board of Revenue Estimates has over the years. And if they work together, if you look at all alternatives, if you have a clear sense of priority and are able to explain those priorities to the people, and if we keep our eye on making sure that we don't exacerbate the problems by increasing unemployment and decreasing necessary programs, then I think we can all pull through together. I will say, Andy, I've spoken to some of the people at Moody's and am very impressed by the fact that Maryland, according to them, is actually better off than most states. We are very fortunate, and we will solve our problems. We will tackle our problems. We always have, but we will also, I hope, be appreciative of the blessings that we have in this great state. Thank you, Comptroller, and thank you, Andy, very much, and Mr. Secretary.
Thank you, Madam Treasurer and Secretary Brinkley, and obviously Mr. Schaufele. We're going to take a few questions from members of the press. Susan O'Brien, I believe, has been fielding some of those, who she works with the Comptroller's agency. But Susan, why don't I turn it over to you and you can ask questions for the press.
Sure. Thank you, Mr. Comptroller. Thank you, board members, and thank you, Andy. Our first question is pretty much for the Comptroller, with Andy coming in at the end. The first question is from Brian Sears. His question is from the Daily Record. His question is there any thought being given to further delays in tax collections or extensions on income tax filings, and what would be the effects on state cash flow should that occur?
That's such an easy question. I'm going to ask Mr. Schaufele to address it, but I'm somewhat kidding there. We have a 90-day forbearance on payment of taxes and fees from businesses and individuals. That is where we connected or we're working in unison with the IRS. So that is something that I mentioned, I believe, had a very positive impact, because we're talking literally billions of dollars of no interest loans from the state of Maryland to our small businesses and our families. Now, that bill will come due on July 15th, which I believe is what Mr. Sears is correctly focused on. And we obviously are prepared to put people. Some people have said, well, what if we can't pay all of our taxes in one lump sum? Well, we have a very well-traveled path of payment plans that we are able to put Maryland businesses and individuals on if need be. But we're also relatively confident that we'll be returning to the revenue collections that we're somewhat accustomed to. But yeah, that's a question that's going to be looked at closely. And obviously, we have to make sure the liquidity of the state and the state's ability to pay its bills and run its government is protected. And that obviously will be done in collaboration with everyone else here.
Okay.
It's a long-winded way of saying I think it's still under review. And we just have to make sure that we're keeping an eye on exactly what is going on with the budgets of small businesses and Maryland families. Much as important as the state's budget is, and the county budgets are, and the municipal budget. I understand all that, how big a priority they are. But an even bigger priority is the budgets of our small businesses and our Maryland families. And that's why I think we need to keep an open mind. Andy, do you want to add anything to that?
No, sir, I think you hit the nail on the head. It's something to review when the time comes.
Susan, could I follow that up?
Sure.
Andy,
Sure.
when you have
Go ahead.
given us your projections, I assume that you're assuming that all the businesses will in fact pass on the sales tax, which they have collected from buyers, and the withholding that they have kept from their employees' paychecks. That will be all collected at the moment, July, I think, is the target date. Is that right?
That's right. That's right. Those funds are held in trust. They're technically the state's money, and we do expect that money will be paid when it comes due.
They're held in trust, but the comptroller pointed out the intent that they be used by the companies to keep their businesses going. I mean, not
Right.
held in a trust.
Sure.
Mr. Secretary, do you want to chime in?
No, I just think that where he's going with this is something we're all concerned about, which is certainly ensuring that our private enterprises, when we talk about jobless claims and retraining people, we want to make sure that people have a job to get to, and the employers have to be able to survive through that. So for some, it might require some cooperation. Mr. Comptroller, I know that your office has been very flexible and adaptive to individual needs as they have to stretch out any payments or anything along those lines. But so far as timing on when people have to make those payments, as you said, it's going to be up to a conversation, I think, between you and the IRS and what the federal government might decide. Our mission is to ensure that Maryland employers that have been grievously hit with this are able to survive through what we can here, and that they then have a landing place so that the displaced workers can have something to come back to. And that's what we're all striving for at this point.
Great
Yeah,
question.
We have
Great question from Mr. Sears, of course. But go ahead, Susan.
We have
What's
a few
the
more. The next question is for the members of the Board of Public Works. In light of the revenue estimates, do you expect BPW to take up budget cuts? And if so, when? That's from Aaron Cox at the Baltimore Sun.
Madam Treasurer, go ahead.
I'm sorry. That's from Pam Wood at the Baltimore Sun.
Well, it's a good question from either Pam or Aaron. Yes, I think that you can anticipate cuts. What those cuts will be and whether they are all a proposal to take all the cuts at one time, which I think is not a good idea, or over time as we see how the economy and the state recover is a different issue. But, I've lived through the 1990s, in the 2002, you recall 2008 and 9. Unfortunately, while we do have a steadier economy than most states, we do have ups and downs in revenue, and sometimes very serious downs in revenue, and we will have a balanced budget. And through a combination of cuts and I assume transfers of funds, we will have a balanced budget. And so, yes, there will be cuts. And there will probably, I assume, be cuts over a number of different meetings.
And I noticed Secretary Brinkley was excluded from that because he's not a member of the Board of Public Works. I consider him a member of the Board of Public Works. So, Mr. Secretary, what would you like to say?
Well, it's we had to have this conversation today to see what the numbers look like and to have those numbers rolled out to the public. We certainly will have some conversations and move things forward. At this point in time, I think what's a fair assessment is that we come to some decisions on the current year's fiscal budget. The bottom line on how that ends up, the FY20 budget, can then set the stage for consideration and perhaps some ideas on the 21 budget. The budget that the legislature just passed a few weeks ago, and then we can move forward. So it's not all going to be at one point, as the treasurer said. We have to take a few steps at this and then kind of see what the impacts would be in the long term. And we're continually gathering more and more data.
And it will be taken, we will look at it, I assume, at the same time that we look at making investments to avoid the need for further, deeper cuts down the road. And I would point out to things like school construction, borrowing for school construction, which both builds for the future and puts people to work. So it's not simply a question of just cutting.
Yes, and let me just add that I'm not sure whether it was Aaron or Pam who asked the question, but I think a lot of members of the public don't realize how fortunate in Maryland that we have a entity called the Board of Public Works, made up of the governor, myself, and the treasurer. We meet every 2 weeks throughout the year, and it has enormous constitutional power that has been broadened by the legislature, so that rather than waiting until the entire legislature returns for some budget actions, the Board of Public Works can make reductions or changes as is called for in the existing budget when the legislature is not in session. That is an enormous asset for the state of Maryland, because the rating agencies, as the budget secretary mentioned, really appreciate the fact that we can take some of our policy decisions and fiscal decisions and implement them in real time. So I just want to make sure the public is aware of what we're talking about here, which obviously some of this will happen between now and July 1st. Thank you. Any other questions?
Yeah, there's just a couple more. This is a follow-up question from Pam at the Sun, Pam Wood, for Secretary Brinkley and specifically. Governor Hogan Governor Hogan directed you to propose any cuts, and have you cut any or developed any so far?
So you broke up on part of your question. I think you were asking if we have, I mean, is it that we have any proposals or what?
That's right. If you've, to propose any cuts, and what have you developed so far?
Well, the process that DBM utilizes is always examining where agencies are and what's moving forward. We will have some conversations to brief the staffs of the treasurer and the comptroller, but actually we even have to have a conversation also with the governor's office later on. Once we saw today's numbers, we can then move forward in putting some options on the table.
Excellent. Next question.
Okay. The next question is from Aaron Cox of the Washington Post. Let me get it right. It's for all BPW members. Is it feasible to weather this without laying off state employees?
Well, that's an easy question. Madam Treasurer?
I certainly hope so, yes. We don't want to add to unemployment. That doesn't help.
Yes, I would like to associate myself with the remarks of the treasurer. But
the federal government needs to get themselves together.
Everything's on the
table. Put some
table.
money out for states.
Right. We're very fortunate. We have reserves. We have some options. We have to examine all of those options, but I would hate to see us add to the problem rather than solve it.
Mm-hmm.
Okay, so another question from Pam Wood at the Sun, and this is for the comptroller and possibly Andy Schaufele. Senate President Ferguson just said the price in the lost revenue was fear-mongering. Do you have a response for that?
Mr. Schaufele, you don't have to answer to that, and I don't think we have to really respond either. So let's just move on to if there's any more questions.
I don't believe there are any more. I'm going to double check one spot. No, that's it from me.
Excellent. Thank you, everybody who participated in this. Once again, Secretary Brinkley and Treasurer Kopp, I join with you in praising Andy Schaufele and the team of people. This is really the kind of government cooperation between different entities that we should see, frankly, more of, not less of. And I think today's gathering has reinforced that view. Thank you very much for joining us. And this will be online somewhere. It's made permanent. It's complying with all the open meeting laws and everything else. And we will stay tuned to this site for any obviously this is going to be made part of the permanent record. But once again, we did not take any official actions. We simply indicated what we were preparing for all the fiscal leaders in the state. Thank you very much.
Thank you. And thank you, Andy,
Thank you.
for backing off the 2.8 billion. It's better. Thank you.
Well, we've learned a lot. Thank you all.
Thank you, everybody, and stay safe and buy Maryland. Buy Maryland products. Keep us going. So
Excellent. Thanks, everybody.
All right. Thanks. Bye now.